G'day and welcome to this week's video. My name's Robert Gowdy, and this week I thought I'd have a look at some of the ETFs. Well, I'm going to look at one, and I'll look at the S&P 500 in the next video. But today we're going to have a look at the ASX200, which is essentially the list of the top 200 businesses listed on the Australian Stock Exchange by market capitalisation. So I'm keen to break this down to say, well, what are you actually investing into? Because I like, for myself and a large majority of my clients, we like to invest directly so we know what we own and also what we don't own and for what reasons. And if we know what we own, it then allows us to go in and explore and understand more about the business. What are their products? What are their services? Balance sheet. And of course, you've got to be pretty interested to do some of that, but that doesn't suit everyone. So what I've got here is a breakdown of the ASX 200, and you can see at the top of the list there is BHP is the largest business in Australia. It represents 10.5% of the index of the top 200. So there's an extra 190 businesses that sit outside these top 10, and you can see there that it's really concentrated. You can see that it's nearly 50% of the fund, and in addition to that, it's really heavy in not only BHP being 10%, so resources, really heavy in financials as well. So CommBank, National Bank, Westpac, ANZ and Macquarie Bank feature really highly in that. So how much diversification do you get? Well, yeah, probably not as much as what you thought you would. And then if we compare that to the S&P 500, it's really devoid of tech, where the top 10 in the S&P 500, which is around 31% of that index, is mostly tech. So it's important to understand, what would you do with this information? Well, for me, it allows us to go and explore further. It allows us to understand where we're investing in, what businesses we own, and ultimately when we invest into the stock exchange, it seems some abstract, boring thing that is very volatile. But it's not. A share market is a collection, it's an auction house for businesses, and allows us, lucky enough, to trade in and out, or invest more so, as we choose, and to pick the businesses we like. But for those starting off with smaller amounts, exchange traded funds or ETFs are a perfect way to do that. It gives you diversification. It means you're not having to select which business you go into. It's all done for you. So great option, and it's good to know where your money is. So there's the breakdown of the ASX 200. Thanks for listening. We'll catch you next week.